As far as possible, avoid credit card debt. It is the most expensive. You would end up paying something like 45% per annum as interest. Completely, totally avoidable. This is in the Indian context. Don't get carried away by 3% per month. 3% per month on a monthly rest is itself 42%, right? You have incurring that, you're incurring GST on that, so don't incur expenses of credit card debt at all. In the worst case scenario, borrow from a parent or somebody if it's a small amount. Ideally don't borrow at all, but if you must borrow, borrow from a parent or borrow from friends or relatives and repay as soon as possible. So one loan which is still good is an educational loan. Educational loan is definitely worthwhile, and again you have to be careful about what educational loan. For example, if you go to suppose you get admission into IIM Ahmedabad and the expenditure for doing the course is about 23 lakhs. Borrowing full 23 lakhs makes sense simply because when you take up your job, you will not get less than 23 lakhs. That is almost guaranteed if you go to a good quality institution. So be careful about where you are going and how much expenditure you are incurring and for what you are borrowing. Now, if you went to another very famous Ponytail Institute, I'm not naming them, you never know, that guy likes to go to court for everything. I know a boy who qualified from there and came to Bombay for a job. He had incurred 20 lakhs or 25 lakhs as expense, including a 10 lakh borrowing. The best job he got was 2 lakhs in a cooperative bank, 2 lakhs per annum, right? This kind of salary, then the costs are not justified. So educational loans are justified in good institutions where I think you should have a 1 year or a 2 year payback. So if you're incurring X expenditure, your CTC should be at least half X. So over a 2 year period on a gross basis, not on a net basis. You will have taxation, you will have personal expenses. I'm not talking about that. But if you take a 23 lakh rupee loan and you know you're going to get a 23 lakh rupee job, forget a 23 lakh rupee job. Even if you were to get a 13 lakh rupee job, it's still worthwhile because it is 2 years CTC. Your loan should not be more than 2 years CTC. In the worst case scenario, 2.5 years CTC, but definitely not more than that. So be careful for what you're borrowing. Borrowing for education is okay provided your jump in salary will justify the loan that you're taking. Don't borrow for anything else, but then having easier said than done. I can only say I have not borrowed. It doesn't mean you won't borrow. Maybe you will borrow, but be careful. Pay attention to the credit score that you have. Today in India, we call it the CIBIL score. You can call it whatever else you want. There are 3-4 companies with the same, which all do credit rating. So let's call it the CIBIL score. Your CIBIL score of 750 plus is good. So the minimum you should target is 750. It can be better. It can go to 900, maybe 850, 875. All that will give you a good credit rating tomorrow when you need to borrow money, right? So now you borrowed for a scooter or a two-wheeler or whatever. You would have known that when the bank looked at your application and gave you a good rate and gave it to you very quickly, it means they were happy with your credit score. If they're not happy with your credit score, this wouldn't have happened. So protect your credit score, because sometime in your 30s you will go and you will go and buy a house or things like that. You want to get the finest rate. To get the finest rate, you need a good credit score, and a good credit score happens by repaying promptly, even if you do borrow, right? So all of you obviously in your 20s would have a savings bank account. Also open a PPF account, and if you've never opened one, but don't put too much money. You don't have to put 1.5 lakhs into it. As long as you put 1,000 rupees, the account will be active. So open a PPF account and start depositing. If you are in the US, make sure that you are getting into a 401k plan, and so that you capture the full credit of what your employer is contributing. In India, open a PPF account. Don't wait, don't postpone, don't procrastinate. Just go and open a PPF account, right? Also try to see whether you can start an SIP exclusively for your retirement. As simple as that. 40 rupees a day, this is what I said. So maybe 50 rupees a day, or when I said 40 rupees, the dollar was 40, now the dollar is 80. So maybe the rule should be 80 rupees a day. So even if you can start an SIP of 2,500 rupees for your retirement, exclusively for your retirement, maybe in a pension plan, maybe somewhere else, but very clearly something which you will not touch for the next 30-40 years, that is what that account is going to be, and it should increase by 10% every year, because your revenue, your income will anyway increase by that amount. So this year, starting with 2,500 rupees, it's a good number to start with. Next year this should become 2,750. Obviously that will be compounding, so it will be year after that, it won't just go, it will go by 275 and not by 250. So that way the 10% growth, make sure that that happens. So you have opened your savings bank account you anyway had, you opened your PPF account, you opened one retirement account, and open one more large and mid cap kind of a fund which will become part of your core portfolio. If you've got an advisor, ask your advisor how to go about doing it, and please open an account. And this account, you can have your mother or a father as a second holder and the other parent as a nominee. Please involve all of yourself. You will be the first name, your father will be the second name, your mother will be the nominee, or you would be first name, mother, second name, and father as a nominee. Please have all three. COVID has taught us that you never know in what combination people die within a week or within 10 days, so there's not enough time to recover, right? So therefore, so you've done all that. Now start learning about investing. Watching these YouTube videos is definitely good, but make sure that you don't just go and fall prey to your relationship manager in the bank who says, sir, open a broking account. So you open a broking account, then your relationship manager says, sir, we can do some F&O and all that. It is dangerous. Unless it's your profession, F&O will not make money. F&O doesn't make money for amateurs. It makes money for the professionals in there, right? So I made a lot of money in F&O. That was because I was a broker. So as a broker, obviously I made money, but it doesn't mean my clients made money. So be careful about what you're doing. If it is appropriate for you, if you have dependents on you, etc., then purchase life insurance. If your parents are rich and or parents are very rich and you don't need any term insurance now, think about it whether later on you may need, so you can buy it later. But 20s is not a very early stage, it's a very early stage of investing. You may not go and buy insurance, but if it is appropriate for you, if you are supporting your family, it's an absolute must. If you have signed as a co-guarantor with your father for buying a house, absolutely a must. If you have signed with anybody else, absolutely a must. So make sure that, see whether insurance is appropriate for you. It may not be appropriate for everybody at this stage. At 32, it must be appropriate for everybody because you've just got married, you've got a kid, you've got a home loan, right? That's a stage when you must have. Should you have now? If you can afford it, it's a great idea. If you can't afford it, doesn't really matter. But if your parents have incurred expenses on educating you, you did not take any loans, so your father paid 25 lakhs for your education, then you need a term insurance of at least 50 lakhs so that in case something were to happen to you, in case you were to die, let's put it bluntly, your parents will get that money, right? Getting a good advisor, financial planner is not a bad idea. Sit with him or her and learn, and then start investing. Don't be in a hurry to say, oh, I know everything. This is also a good time to be investing in relationships, right? So you make friends, you build your profile on LinkedIn. Be very, very, very careful as to the pictures that you release online. Right, that teacher in Calcutta, she's paying a very heavy price for putting her private pictures, right? I mean, I wouldn't have even bothered, but don't put something which you think others should not see. It does not matter. The private setting can change, something can happen and pictures leak. So be very careful. Every HR is watching your Facebook page, your Twitter handle, everything is being watched. So be very careful. Don't look at what I do on Twitter. What I do on Twitter doesn't matter. It is not going to impact my career much. I believe it is having some impact, but it can ruin your career. Be careful. Develop some marketing skills in the sense, some skills which you can market other than your job, right? Something like a side job. If you are a marketing and salesperson, maybe photography is not a bad idea, or something which you think will be a good second line to earn money, right? Build your health. Don't cringe on joining a gym and getting a good trainer. There's a huge difference a trainer can make. So get healthy. I mean, you're already on the path to get wealthy. Get healthy. There is absolutely no justification for being rich and unhealthy, right? So don't do that. Don't make that mistake. So that is one thing. Start building your network of friends. I mean, going on LinkedIn, Twitter, whatever, and start building. Be very clear about your priorities. Friends, work, money, health, right? You have to prioritize. So when your friends call you for an evening out on every Friday or every Saturday, understand that Sunday morning you won't be able to go on that long run that you wanted to do. So the long run versus beer in the evening, you have to handle the conflict. We can only create videos, right? So it is very nice if you can create a spending budget, and because you will know this is what I'm earning, this is what I have to invest, this is what I'm spending. So if you can make your goals and all that, it's great. In fact, I have this book which is goal based investing. So if you can have your goals written down properly, sit with a planner and do it, that's great. But that's an ideal situation. At least halfway stage you start learning at least what you're doing. Don't just go and blindly say, oh, Subra said this fund. No, Subra does not have any brains to pick funds. You need to have your own brains also, right? If you have a girlfriend, start talking about how you're going to invest, what you're going to do, because don't get married to somebody with whom you're not compatible at all. If you think a vacation means Goa and she thinks a vacation means Paris, talk about all these things lifelong. You're going to have her, you're going to wake up with her every day. You can't afford to fight with her every day, right? So whenever you want to make something big, buy something big, think twice, thrice, 4 times when to buy, how to buy. Should you accumulate money, do an RD for 6 months, then make the down payment and buy it, or whatever. Make sure that you think about a decision and then buy, right? One skill which I found very useful, and which I must thank my mother, is teaching me to cook at a very young age. So maybe I was in class 3, class 4 when I would start cooking, and now I actually enjoy cooking, and I think for me it is therapeutic. So developing some skill like that, developing hobbies, maybe a running group, cycling group, hiking group, traveling group, any of those things would be very useful. And one very important thing which perhaps should be the first is learn to say no. After you have bought yourself maybe a term insurance, maybe health insurance, a savings bank account, an index fund, or some fund which your advisor has advised, a retirement fund, after doing all this, you have to start learning the art of saying no. No to F&O, no to cryptocurrency, unless it's your career. If you're making a career in cryptocurrency, by all means do what you want to do. Personally, I don't do crypto. It doesn't mean you shouldn't do. I don't do F&O, it doesn't mean you shouldn't do. But if it's your profession, if it's not your profession, if you are a B.Pharm graduate who is into medical work, don't dabble in F&O and cryptocurrency. It's not your cup of tea. Don't do that. Thank you. Longish video. Thanks a lot.